against to make it. They must not know I love trips to Vegas. The underdog became the underrated. In my city, I'm paraded. Confetti dropping when I'm home. I'm floating down Tudor, floating on strong. Had so many rights they couldn't tell us we was wrong. Lamar Middle School, we was on. I got this lion heart in my chest. I'm one of the best. They ask about him, they gon' bring up success. See, I've been fighting this stress. You ain't right, you get left. I'm good with my left, so I don't argue with refs. Cause just like EA, I'm in the game.
Hey everybody, it's Rob here and Carrie here again with We Give 110. Of course, it is Wednesday, so we have Lisa here, the mistress of all the numbers of mathematics, the Viscount of the financial vocabulary. I'm trying to figure out one for today. I can't remember one. Okay, but we're going to be talking about finances and all those wonderful things that go with business that a lot of people don't really want to talk about, but it's so important because if you don't know about this part of the business, it's gonna kick you in the butt. So welcome once again, Misa. Thank you for coming in. You know, Perfectly Kept Books is getting better, and I'm starting to follow people, follow your streams and stuff like that. So if you haven't checked them out, Carrie's been telling me, hey, you got to check out her stuff. So I'm starting to do that. So yeah, we got some great stuff coming in that way. So if you haven't checked it out, check out Perfectly Kept Books, perfectlykept.com, and also it's Perfectly Kept on Instagram too, right? Perfectly Kept Books on Instagram too, right?
Mm-hmm.
Yeah.
Yep.
Yeah, I'm just starting, so I can't remember. I didn't write it all down today. So let's get into today. So today, first one we're going to be talking about is the balance sheet. Now, a lot of people get this messed up, and it's something you got to keep your eye on. So let's turn it over to me today.
The balance sheet, it's actually very, very important because it kind of tells you how healthy your business is. And at the end of the day, like the name says, the balance sheet should balance. And so this is where you get that good old accounting equation where it's like assets equals liabilities plus equity. And so that's exactly what it's telling you. It's telling you your assets, what you own, your liabilities, what you owe, and then the equity. So whatever's left over, that's what's left over for the owners or the shareholders. And the important thing about the balance sheet is if something were to ever happen to your business and it came down to where, okay, maybe you want to sell, or maybe you're going to have to shut down, you have to go and assess, okay, how much assets do I have? And will it cover my liabilities? Because at the end of the day, that's what you want to be able to do, is being able to cover your liabilities and not have more liabilities than you have assets. And so because if it came down to it, you want to be able to pay all your assets or pay all your liabilities with whatever assets you have, and then whatever is left is what you would be able to take home, just in case you ever have to shut down the business. If that happened, we don't want to get to that point, but it doesn't happen. It happens. But
it's business. It always happens, right? There's always that chance. But if you do things right and you keep those books and you keep them square, then like last week we talked about, what's yours and what's the business's, and if you keep that balance sheet correct, then you're going to know exactly what's yours.
Exactly. Right? And then some things to look at on the balance sheet. So under your assets, so if you invoice customers, which means that they're not paying you up front, you're sending them something and they're supposed to pay you within whatever terms, you're going to have an accounts receivable balance. So we talked about accounts receivable, and so that will show up on the balance sheet. And what that balance is telling you how much people owe you. So if it ever came down, you're like, I need some cash. That's a good account to look at, because it's like all these people owe you this money. So if you collect it, you can get that cash in the door. And so that's something that people don't really pay much attention to, is like, who owes you, and like following up with those people to make sure that they pay, because you don't want to invoice someone and then they just never pay you. And so it's like you're sitting there waiting to collect and you never even inquire, because I know it's a little uncomfortable to kind of ask people for money. I know for a lot of people, it's kind of like you don't want to feel like a collector, but that's what you have to do.
And here's what I loved about accounting solutions is you have the ability on the accounts receivable to set up automated alerts so that it constantly contacts that person that you're collecting. And so it's not a personal nagging, call you on the phone type of deal. It's like I'm documenting this stuff from a business perspective, which is important also, I think.
Exactly.
Now, can you set that up with an SMS?
You can with the majority of, like, I know FreshBooks does this on their invoicing platform, and I'm pretty sure QuickBooks does too, where it allows you to send out another automated response if it's not paid in full.
Yes.
So I know FreshBooks does it.
Yes. Now, as far as sending a text, I'd probably have to, I'm sure there's a way you could probably figure out a way to send a text notification. So the way technology is set up, there are options. But at a minimum, sending them that email so that you can have it's in their inbox and they know that they owe you and you get paid. Because I think that's one of the big things that many companies that don't get paid up front, that's one thing that they kind of overlook is all the money that they're not collecting. But I'm like, if you sit and you look at your balance sheet, you don't want that AR balance to keep going up. You want it to go down so that you know you're collecting those funds.
Yeah, and then and one of the big things, especially on the balance sheet, that I ran into, like when I had my printing business, was I had a couple of customers who ran their bill up, and they didn't realize how high it had gotten because they just kept coming in, and they're a corporate count, so they figure, oh yeah, okay, I still got, I can still do this, not a problem, and they forget that mentality of this actually costs them money, and they start doing things, and then they're like, why does it cost so much? Well, you came in on this day, this day, this day, this day, this day. You asked for all color. You asked for glossy prints. You asked for it all costs money. And we gave you receipts every time you came in. You signed on it. Here it is. Here's your copy. But, that's one of the things that people, you have to check out, and make sure that you're following up, especially with those accounts receivable, gotta keep them.
Yes, exactly.
So here's a prime example of like cloud-based solutions. FreshBooks is like a just getting started, like it's $15 a month accounting solution, and they have like this integration page. And I just went specifically to the category accounts receivable. You can click on that link in the chat, and it will take you to some of the integrations that integrate specifically for that function of that platform. So that's a pretty neat concept. If you've not looked into FreshBooks, that's one option that you can use. That's a little less expensive.
Yes. And it's probably more simple, because I know QuickBooks can get overwhelming. So
yeah. Now, what should people be looking for on a balance sheet? I mean, they should have lots of different things on there, but is there something specific that they should be having on their balance sheet, even if it's just like they're just beginning and they're just scribbling stuff down on a page? Well,
one of the main things is making sure that your balances are correct. So everything that's on the balance sheet, the amount that's listed, you should be able to accurately tie it back to something. So like if you have loans or even your bank account, that's why reconciling is important. So like if you want to know what your true balance of something is, you should be able to look at your balance sheet and it's true to what is actually there. Especially if you are tracking loans or something like that, you want to know, okay, I have an outstanding loan. What is the balance of that loan? And you want to make sure that, of course, you're recording all your payments and interest correctly so that you can track that loan and see, oh, okay, I have this much left or I've paid this much. Versus
if you had to break it down like in like a pie, let's just say, for example, and there were like 5-6 main chunks, what are those 5 or 6 core areas that you're injecting into your balance sheet? Like you were talking about loans, all your liabilities and expenses, what are the big categories that kind of flow into the balance sheet?
So the main ones, so of course cash, because you want to know how much cash you have. we mentioned AR. So if you do invoice any AR that you have there, then of course, and then any other assets that you have, anything else that you own. So depending on if you've bought equipment or even buildings or land, depending on what you're doing, all of that would be on your balance sheet as well. And then when you look at your liabilities, of course, anything that you owe. So credit cards, loans, any AP. So if you owe people, so they send you a bill and you owe them, you want to make sure you're paying your bills and monitoring that to make sure that balance isn't going up and you're actually paying people if you want them to pay you. And then, of course, then the equity section, which is when, especially the smaller businesses, you're usually putting money in. So you want to see how much money you're putting in, also how much money you're taking out, because that affects your cash. So that's something to look for. So especially if you're not paying yourself like a specific amount and you're just like pulling cash out just whenever, all willy-nilly, that's something you want to watch for. Because if you say, well, I'm looking at my bank account, and I don't see, like, I made all this money, but where did it go? Well, how much money did you take out? And that's something people usually overlook, because it's like, but I made this money. So, what do you mean? And I'm like, yeah, you're taking a lot of money out that you probably should either keep in, or you just don't need to pay yourself that much. That's another thing some people do. They're like, well, I made all this money, so I can just pay myself whatever. And you don't necessarily need to overpay yourself.
So specifically on the assets, mm-hmm. and the things that you own, how does that factor into your balance sheet? Like, I guess where I'm trying to take the question is, like, to really know, like, the functioning operating capital side of things compared mm-hmm. to, like, okay, I do have this building, I do have this real estate, and it is valuable, but it's not liquid, right? I would have to sell it. Right. So how does that, like, I guess, flow into the balance sheet as well? Is there a specific way to qualify and subcategorize those assets?
Yes. Okay. So your assets, you'll have them separated. So you'll have like current assets. So ones that are actually more liquid, where you can probably go pull the cash, or it's something you can easily convert to cash. But then you have, of course, other things. If you do have land or, other types of assets, you have them available, but it's not something you can easily convert to cash. It can be converted to cash, but it's not as easy. So on your balance sheet, it does separate it out as far as something that's current. It's a current asset which you can easily convert to cash. So that would be the main difference in the two.
Okay.
Yeah. That's awesome. And hey, Larry, it's nice to see you hopping in here. Yeah, thanks for the heart there. So once again, we're talking with Misa with We Give 110 and Perfectly Kept Books. So if you need some help, hey, there it is. Hey, good people. So, hey, Larry. All right. So, so if you're looking for financial advice and everything like that, head over to Perfectly Kept Books and Perfectly Kept Books on Instagram as well. You'll be able to get a lot of information there. And if you're also looking for that personal success journal to help you get through all of this stuff and get your business up and running and get yourself motivated and focused, then head over to We Give 110, download your free personal success journal from there. Now we're going to head on to the next one, which is the statement of cash flow, right? So this one can be a little confusing to a lot of people. So yeah, I'm not going to try to explain it because I'm not the expert on this. This is why you're here.
So if we just have to summarize what it is, it's showing the inflow and outflow of cash. So how is cash coming in, and then how is it going out? And so it's connected to, of course, your profit and loss, because that's where your money's coming in. You're getting the revenue, and then of course you come down to your net profit or net loss, depending on what you have. But then you're taking that. So of course you have your revenue, you take out your expenses, and then you have cash. But then, like, how is your cash moving? So if you are, of course, like we mentioned, taking money out, it's going to decrease your cash balance, because you're taking money out that, yes, you earned it, but it's no longer in the business because it was taken out. And then, of course, that's also where you watch your your bank balance, like your actual cash balance that's like in your bank, which should match. This is how they tie together. The balance sheet cash balance should match what's on your cash flow statement balance. So that tells you, that's one way to know that your finances are correct when you can tie them all together. And so the cash flow, it's literally telling you how your cash is moving in and out. And usually the biggest way that the cash balance is lower than most people think is because they're taking money out and they're not really accounting for it, because one, they're not looking at the statement of cash flow, and two, they're just going based off of the P&L, which, yes, the P&L is very important and it tells you very important information, but it doesn't give you the full picture. And so when you bring all of the financial statements together, you get the full holistic picture of what your business is doing and how it's actually faring as a company.
Yeah, and I think it's so important, especially for a lot of our online entrepreneurs, because you're not a brick and mortar and you're doing all this stuff. There's a lot of people who forget to make these statements, make these balance sheets and stuff at home while they're working on their business from home. You know, like they sit there, you're sitting behind a computer, you start buying all this software. So I know I'm guilty of it. So was one of my coworkers. We talked about this. We end up buying a whole bunch of software. But also, you know, like if you're in the coaching realm and if you're into the affiliate marketing, and I know Larry, who commented earlier here, he could probably make those comments as well, is like you'll spend a lot of money on training, you know, learning all these different affiliate tricks and all that stuff. And then if you're not keeping track of your cash flow and your statements of cash flow and where it's going in, what's coming out, what you have, what you've just created, what you've got, you can end up in a lot of trouble. So this is once again, we're talking about that. This is something you have to do every day, you know, and I think maybe that's something that we could talk about later, is like a daily cash flow or like a daily statements and stuff like that people can do. And maybe we can do a thing on, you know, what people can do who are online entrepreneurs. Maybe in a couple of weeks, we can focus on something like that. Because a lot of people, I think, just don't get the finance side. And that's why having you here is such a great thing to explain. I know Carrie's over there taking notes, like, okay, I got to do this, I got to do that, you know, like, he usually says, you know, Rob, you're going to talk to the people today so I can take notes. So, I mean, if you're not taking notes at home, you're going to want to do that. If you haven't, you know, if you just tuned in now, you're going to want to go back and watch the beginning of this. And so you can get that information about what is a balance sheet, what is a statement of cash flow. So once again, this is Misa. She's our expert on finances and stuff like that from FreshBooks, or not FreshBooks. I just read that. From Perfectly Kept Books. I got too many screens going with different comments going here. From Perfectly Kept Books, sorry, Nisa. Perfectly Kept Books at perfectlykept.books.com, and also Perfectly Kept Books on Instagram as well. So you can check her out there and get a lot of information, and she's giving it out there. And then, of course, we give 110. So let's move on to the next one. Unless you have a question there, Carrie. Do you have any questions? Or
no, I was just going to just talk about that daily routine. That daily return and report's really important for me. It's like clearing out my email for the day and making sure that like I'm consolidating the tasks that I need to do. And so that's one of the things that I would do on the end of the day. Just like a teller would, you know, they would close their bill out for the day. Same thing. I would look at my statement of cash flow. That was really important to me because I want, like, here's a prime example of it, of why you've got to really track that, is because I was on a job, running a construction job, and we had to pay for parking like every single day. And I had to pay for parking, and I had to pay for 15 other people to pay for parking. And so knowing how much was fluctuating coming in and out, that way I could bill it out properly. I got to the point where I probably left about $4,000 off of our books of what I could have collected on from the general contractor that was paying for all of that, right? And so I could have easily lost $4,000. But because I was looking at that statement of cash flow in FreshBooks, I started to see a pattern that started to pop up with that specific category. I was like, oh man, I need to document these. So that was just one personal example of how it's helped me.
Yeah. And if you're looking in the personal success journal, we have like for each day, you have Friday and stuff like that, and you can come back and you can rewrite what you had. Down at the bottom, there's always a return and report section. So if you're looking for a place just to write down or scribble in what you paid and what what money's coming in and going out, that's a great one. And we also have the weekend, at the end of the week, you can fill in your little expenses in here if you need to, right? You also tell how what kind of day you're having, right? And then you can go on from there. So I mean, that's one of the reasons why if you don't have a journal and you're not using one, then you really need to start. If you don't have an actual bookkeeping thing, you still need to record it so where your money's going, right?
Yep.
So, all right. So, really cool. All right.
And one more thing on just about cash, because I know a lot of people are afraid to look at their bank account, but that's something that you can do. Because it's something I do every morning. I check all of my accounts and I look and see, okay, what is the balance? And then kind of spot check, okay, this went out, this came in, and just making sure nothing looks weird, just at a quick glance, just so you can have an idea of where your cash stands every day.
That's what you need to do. Your next Instagram reel needs to be like I love the dun dun dun. Check your books. Check your books.
Yeah, and I think that would be hilarious. Carrie, we got to start doing them.
Well, she's already doing them, and yes, we need to hack her. I'm serious.
So this is two marketers going, we need to hack the bookkeeper. This is something wrong here. So if you're out there watching, you definitely want to hit up, Perfectly Kept Books on Instagram so you can check out Misa's stuff. Yeah, that's pretty bad that we need to start hacking the bookkeeper. But all right, so as you can see, we have a lot of fun here, and once again, Misa from Perfectly Kept Books. You can hit her up on Instagram, or you can hit her up on perfectlykeptbooks.com to get any of your questions answered and stuff like that. And she's open and she's willing to take clients if you're looking for someone to help you with your books, especially if you're international and you need someone to help you with some of the American stuff. She knows what to do, but she also knows who to talk to if she doesn't. So she's going to help you out. All right. So let's get on to the third one here. Let's get on to our third one today. And it's one that, it's that love-hate.
Yes.
It's the love-hate. And that is profit and loss, right? It's that balance of life. And, when we talk about, where the money goes and Carrie's married, I'm married, the wives go, where did that money go? When's it coming back? Profits and losses. So we'll let you take over there.
Yes, this is, of course, everyone's favorite report. This is the one that most people talk about because, of course, it lets people know, it's how much revenue did I make, and then how much did I spend? That's pretty much what it's telling you. How much money did you make, did you earn, and then how much did you spend? And so it's important to look at this because, one, yes, you want to know how much revenue you're bringing in to make sure that you're making money as a business. And then, but one thing to really pay attention to are all of the costs and expenses that it takes to run your business. And most people don't really pay too close of attention to it. It's just they probably have 50 million different softwares that they're signed up for that they probably don't need. They signed up for this, or they're we're going to run ads and then we're doing this and this. And it's first of all, do you need all those expenses? Is it something essential and necessary to run your business? Or are you just spending money just because you earned it? Because that's another thing. A lot of people like to just spend it, but just because they earned it. They're like, oh, I earned this money this month, so let me just go buy whatever, if they don't even necessarily need it, because they could have used that money for something else. It could have just been put to the side for, something else they could have invested in, or just rainy day savings, which again is something most people don't think about, because if last year didn't teach anybody anything, it's that you never know what may happen, and you want to make sure that you are covered. And so making sure that you know what it takes to run your business, just at a bare minimum, will give you a good idea of, okay, this is how much money I need to make so that I can run my business. And then you take it a step further, and it's like, after I have all my minimum expenses covered, now I want to really, really make a profit. So then you can start making your adjustments as far as, do I need to adjust prices? Do I need to get more clients? What do I need to do to kind of get to the profit that I actually want to have? Because that's the goal. You want profit. You want your bottom line to be profit. You don't want it to be negative. However, sometimes it is negative depending on the situation, or sometimes earlier in the business stages. So it's important to not just pay so much attention just to the revenue line, but to kind of dig into the expenses and also catch expenses that you're paying for that you don't need to pay for anymore. Because you might sign up for something and they're just auto charging, and if you're not paying attention, they could charge you for a whole year. And
the sneakiest ones are the Apple App Stores ones that
yes,
you forget about them. It's like, what is this? Like Rob says, your wife's like, what's this charge? Like, she's the charge. I promise you the charge, please. What's this charge right here? It's $5.50 something cents a month. Oh, that's an app I bought. So, but I don't qualify it, right? I go in there, I'm like, ooh, I need that app. And it's like, would you like to automatically drive? Yes, I would. I want to make it simple.
Yes, because you're like, oh yeah, of course.
And then I'm like, and then I stop using it. And it's just like, I forget about that. I have it monthly billed. But yeah, that has happened.
Mm-hmm. Yeah. And I think that's a big thing for a lot of people these days. It's not just the little apps. It's also the big apps, like your Microsoft, your Photoshop, your internet, all these different applications that people are using. But also the fact that people are just using their phones or their credit cards and actually not carrying cash anymore. Mm-hmm. Right? When you carry cash, you see what you have. Yep. And you spend it. Yep. And you can see, okay, I have this. There's a visual representation that you can justify and look at. But if you get into the habit of using your cell phone to pay for things by tapping, or using your credit card to always pay for things, unless you're looking at your finances every morning like you do, like Misa says she does, like you can find yourself getting into trouble. Yep. Like all of a sudden it's like, wait a second, like I thought I had $50 in there. I thought I had $100 in there. Mm-hmm. But then when you go home and then you look at, oh crap, they just took out this thing for this, and this one for this, and this one for that. Like you end up money. So like for me, I originally put a lot of stuff on my credit card to build up my credit rating, because having been in Korea for 10 years, my Canadian credit rating was wiped out because I didn't have an income there. Yeah. I wasn't using anything. I wasn't doing anything. So I had been out of the country, and I went back, and, like 2 years ago, and I went back into the bank and I said, hey, I'd like to get a credit card. Like, they're like, you have no credit. And I was like, yeah. Is this a good thing or a bad thing? But so I had to start redoing that. And then all of a sudden I had all these, charges on my credit card. And I was like, I don't even use that anymore. And so I just moved everything off the credit card. Now I built up my credit rating again really fast, but it's something that I don't like having. I don't like having credit. I don't like owing money to anyone. I don't like any of that kind of stuff. If it's in my bank account, I have it in my hand, then I'll buy it. Nothing goes on credit. Nothing goes on a loan. Nothing goes like that. And people, I think, are forgetting about that. And so, like, Apple apps, all these, some people are like, oh yeah, they play a video game and they play it for like a couple of weeks and they're like, oh yeah, I want to get like the membership. They're going to take $17 every month. And then all of a sudden, ding, like you stop playing the video game. They're still, they're still going to nail you with that.
And a big thing is like when you sign up for trials and they're like, hey, sign up for this 1 month trial or this 1 week trial. And then, because they're going to charge you as soon as your trial is over. So if you don't pay attention to when your trials end, and if you're actually going to use it, then they can sit there and charge you for however long before you catch it and then actually cancel.
Yeah. So Larry says here is like there's a threshold amount sneaking under the radar. Yeah, there's definitely the whole bunch that are sneaking in there. And a lot of these are big reputable companies that will ding you little bits here and there. And that free.
One question I did have, and that maybe this is a little bit off topic, but I'm thinking about Amazon with this question, and I'm thinking about how they leverage their liabilities to then turn a profit maybe a year from now or 3 years from now. And so what is your experience like taking on loans so that you can buy properties, taking on loans so that you can leverage different assets maybe down the road? They might be qualified as a liability on your balance sheet, but there's something that can turn a profit for me possibly down the road. So that's just one question I wrote down. What are ways that I can leverage my liabilities to turn a profit? I know loans are one. Do you know of any other?
Well, if you can get a credit card, like an actual business credit card, because you do want to kind of try to help build up your business credit. And like other ways, it's like getting like net 30 vendor accounts. So something that'll help you build up your actual business, like not your personal credit, but your business credit, so that at some point you can walk into the bank and hopefully get a loan or get whatever you need so that you can make the necessary investments that's going to benefit you later down the line. Because usually in the beginning, it's really hard to get any type of financing for like a new business. It's hard, but there are little things you can do along the way. So I'm like, if you can get at least like a starter business credit card, like just for your business, and like
now, could you get a prepaid credit card for like a business then? Like, would that be a good way to do it?
Yes, if it's something that's going to be under your business, you want it to be. Yeah. You don't want it to be personal to you. You want it to be under your business. And
yeah, so like if you said like I want a $500 limit on this card and like just take it directly from my account, it's like on hold. That $500 is on hold for that credit card, and then you can just kind of spend off of that. Yeah, I think. I mean,
one of the things that like specifically I do on the side is videography. You guys know that, and so right now we're building out a pretty awesome experience for customers that we work with funnels, videography, production, and one of the things that we've kicked around is how can we leverage some of our business credit to then in turn invest into better equipment, right? So that it can turn a profit for us. Better equipment, better quality, better results for the customer. The customer is going to pay more. So that's our thought process, and it's something that's like kicking around in conversations right now. Is how can I take something that might be a liability now and that I might have to pay a loan on, but can turn a profit for me, like for example, like purchasing camera equipment.
Yeah, and that's the thing. That's something you can track within your financials too. So it's like you do get a loan and you're like, I'm gonna go purchase this like really, really expensive piece of equipment. But then you can actually look at your finances and say, okay, I purchased this equipment today. And then you could probably look, months down the line and say, because I purchased this today, the next 3 months, I was able to bring in 3 times my revenue because I was able to purchase this equipment, which you could probably then go and probably, if you want to, pay off the loan early. And then you have a way to like 10x, your revenue because you have that special equipment that maybe no one has, or you have something very, very special that you can now charge premium for.
And here's an awesome just tax, like I'm not a tax
disclaimer.
But I can tell you this, I do have a tax accountant that is probably one of the best. And I do know this, that equipment can also have depreciation written off on it, which is also going to benefit you on your tax liability. So that's something also to keep in mind as you get to tax season and you're talking to a tax advisor, a consultant, or accountant in general. Those are the type of questions you want to ask. What type of depreciation can I incur on my assets, the things that I own, so that it lessens my tax liability?
Yep.
I wonder if there's a threshold of like how much something costs to get that depreciation, because I mean, I would like to get a new mic, and like I know some mics can be like thousands of dollars, but I want something that has better sound quality. This one picks up electronics, like I have to be careful when I'm recording. Like I'll just get a big buzz. But for a lot of people like that we're focusing on is people who are getting their businesses going. A lot of people are going to be trying to do organic marketing and be putting out videos like on Instagram, putting out all these different kinds of different things. They're shooting videos on their phones, and then, to upgrade, they need to get a camera. Like, Carrie's got some like Bluetooth mics. Like, is there somewhere that like, what's the line? Maybe that's a tax person question, but like, what's the line on how much you have to like spend before you can start writing off depreciation on stuff?
Well, like, again, I'm not a tax professional, but I do know that there is disclaimer, but like there is like, because the IRS has, now that is something too. The IRS does list a lot of the information like directly on their website as far as certain thresholds and amounts. And I do believe like 2,500 is the amount that, like, anything under 2,500, you can just take the full, you can just take the full expense that year versus depreciating. But anything over that, it would need to be depreciated. So that's just my little basic.
And it's going to operate. It's going to operate on a schedule. So over a period of time, that depreciation is going to lessen and lessen, which is going to increase your tax liability. So when you first start out and you start depreciating at a higher amount, then I can write off and shelter some of that tax. Over a period of time, it's going to lessen and lessen and lessen because the life cycle of that asset or liability, whatever it is. Always get those confused. But over a period of time, that's what's going to happen is you're going to lessen the depreciation, and then you're going to be paying more in taxes. So that's why when you first start out, when you're leveraging a lot of loans, like that's the whole point in all of that is so that you can get that equipment, so that you can depreciate the equipment, so that it can lessen my tax liability, and I can take more in profit over a period of time. By depreciating those assets. So that's it. I would definitely, like I said, we're not experts, but I would definitely have those conversations with an accountant.
Yes.
And ask those questions, because like when I first started out, I had no clue until I did that first return and report with my accountant. And he was like, you could have done this and this and saved yourself this money, and you could have depreciated that and done this. To leverage your profit more here in the first 3 years that you're in business. So it's just those are probably the last conversations that people have, and they need to be the first.
Yeah, and that's the thing too, is not thinking of tax as an annual thing, and think of it as something that you want to do right along with your bookkeeping. You want to work with a tax professional throughout the year so that you can literally plan out your year and that you can figure out, like, is this the year that I should make that purchase, or should I wait until next year? Because like the tax professional will look at your specific tax situation, because everyone's is different. And so they will look at your situation and say, okay, this is what we're looking at for this year. You probably want to make these moves today versus waiting, especially because if you're going to be making more money later, like, your tax bill is going to go up. So if you can, like, plan ahead, that's what they will help you do. And so that's why it's important to not just think about, I just want somebody to file my taxes at the end of the year. It's like, no, the whole year, work with someone so that they can help you plan out your entire year and make sure you're getting the best tax advantage that you can.
I think that's gold right there. That's gold right there. Like, have a person who knows it and can help you plan out your taxes so you can get the better benefits at the end of the year.
Yes.
I mean that's the key. So many people just wait till the end of the year and do everything, and then they're like, I gotta pay money. But if you actually had someone at the beginning of the year saying, look, we guess this is how much money you made last year, let's add on 5 to 10%, maybe a little more, and then we can plan it out. So if you're like an affiliate marketer that's out there and you're selling big ticket items, you never know, you're gonna be dry for a couple of like weeks maybe, and then all of a sudden you hit like 2 or 3, and maybe then all of a sudden 10 in the next month. Like, your money's going to be up and down. So as soon as that money comes in, reaching out to your accountant, how can I offset this?
Yep.
That would probably save you so much hassle. So
yes,
Well,
it goes hand in hand with your bookkeeping, because you want to keep your books up to date, so then you can give them accurate information to work with.
Yeah. Wow.
Yeah. When y'all were just talking about that, and I was thinking of something, but I lost my train of thought. But this has been like, these are getting better and better every week. Don't y'all agree?
I mean, as
I'm back in class. I feel like Misa is teaching me now. Vice versa. I used to teach Misa. But on some positive news, we have just closed the deal with a guy that has a private hangar and a jet. So I might need to run in my book when it comes to that point. We're going to have a lot of expenses. We're going to hopefully have a lot of profit. And that's just going to be a project that I'm going to be working on. So I figured I'd mention that on the We Give 110 side, because we're going to be building out funnels for brands that are going to be promoting through this way, that we're also going to be doing videography for. We're going to be building out cart funnels. And so tune into that on We Give 110 to see how a cart funnel works with the e-commerce brand and website, as well as we're also building out some webinar funnels for real estate agents, really commercial brokers that are on the investment side, and then some book funnels. We've got some book funnels coming in the pipeline as well. So if you're an entrepreneur out there and you're looking to get your voice out there, your business, if you're looking to collect leads, that's the type of stuff We Give 110 can help with. And what we specifically do is we create that accountability system that's going to support your business. So that's why we've reached out to Misa. She's the expert in finances. And so when you guys have a question, you don't have to go to somebody to ask. You can come to We Give 110. You can come to Perfectly Kept Books, and you can ask those questions right here, right now. And I know you have those questions, because I promise you, when I first started, I had 1,000. I still have 1,000. I've been doing this for 10 years. So you're going to have questions, and it's okay to ask them. It's okay to be vulnerable. Reach out to us. We definitely want to help you. So that's it for my part.
Definitely.
So I think that'll wrap it up for today. So once again, thank you, Misa, for coming in here, providing us with all these golden nuggets of information, because I mean, I know a bit about finance, but it's always better to talk to an expert, and they can always untangle and get rid of a lot of these false truths that people have in their brain, and always reiterating that it's a habit of keeping good books that's going to help you be successful, right? Yep. And so thank you very much for that. And next week, do you have an idea what your topic is, or we're going to be holding that off?
I don't remember.
We can surprise them.
We can surprise them. That's not a problem.
Yes, we can.
Not trying to put you on the.
Shout out to Larry for engaging throughout this entire process. Larry, for staying on with us, for commenting, for engaging with us. If you've got a need on your business, Rob and I will set aside some time and consult with you, meet with you, and spend 30 minutes of our time just listening to what you might have going on that we might be able to contribute and help with. So I'm going to throw that out there, Larry. Don't know what you do. Rob,
I know Larry. So
Larry
can hit me up and just let me know.
Larry, we definitely want to engage with you because we definitely appreciate you sticking around and contributing. So appreciate you.
Just a shout out to Larry here is if you're into affiliate marketing and stuff like that, hit up Larry on his Facebook and stuff like that. He'll be more than happy to help you out with learning how to move some big type affiliate marketing, big tickets. So we're going to wrap it up here, and thank you very much once again, Misa. And we give 110. You can go get our professional success, our personal success journal there for free, and also you can also go to Perfectly Kept Books and ask Misa questions and stuff like that. If you need help with bookkeeping and all that stuff, she's the lady to go see. So if you have any questions, please feel free to put them into the comments of any of the videos on our Facebook pages, or on all 3 or 4 Facebook pages. And of course, we are also on YouTube. So if you haven't seen any of the videos, or if you want to go to one place and see all those videos all in one place, you can catch up at We Give 110 on YouTube as well. So do you have a YouTube channel yet, Misa? If you don't, you got to get you going, girl.
I'll take it one step at a time.
All right, so we're going to throw it to the outro, and thank everybody for coming. And I hope you enjoyed today, and I hope you got a lot of golden nuggets of information out of that. So we'll talk to you all later. Bye.
Bye.